Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, July 8th, 2015. In today's video, we're going to discuss the upcoming earnings. And again, this is very important because earnings are now kicking off with Alcoa today after the bell. This is notoriously what is known as earnings starting point, where we see earnings start to flow fast and furiously. Alcoa today, Pepsi tomorrow morning. Those are the two I'm going to cover right now. This is the chart of Alcoa, symbol AA. You might say that chart is ugly, and you would be right. It is ugly. Very ugly chart. However, ugly charts are what I focus in on and I love. Okay? Now, it's not just a big sell-off that I look for, but bottoming signals. One thing you can see yesterday, you had the big sell-off, and this is the daily Alcoa chart, the big sell-off and reversal. Notice how today we retested that low, but we haven't closed below it. As long as you do not close the day below the low from yesterday, which was around 1057, you have to look at a bullish move off of earnings. Now, by the way, I just want to give the disclaimer that earnings can do anything. It's a high-risk trade either way. But I can read the charts and bat decently better than 50-50 on these things as long as we read the chart correctly. Why has Alcoa been pounded? Well, because the price of aluminum has collapsed. We've seen copper down significantly. Take a look at the JJC. The JJC is the copper ETF. By the way, yesterday a beautiful bottoming tail on that as well, and actually up today as well again. But bottom line is Alcoa down on commodity issues, commodity prices, and China. China kind of is one and the same with the commodity prices because, again, China's been collapsing, and that makes people fearful of commodity dumping. And therefore, stocks that deal in commodities have been hammered. You could look at Freeport-McMoRan. You could look at U.S. Steel. All of them have been taking hits drastically lately, I should say. Now, the key is this. The bottoming tail yesterday holds as a bottom in the play here, as long as you do not close below it. Going into earnings, assuming we do not close below it, look for an up move on earnings. What am I analyzing? What are the charts saying? We're looking for, on earnings, a move back to $11. So you're looking for north of 11. You should get to 11 or 11.05 on earnings if the chart holds and does not negate itself. If tomorrow on earnings it closed below the bottoming tail, then it's 100% off. As long as the bottoming tail holds, then it's a bullish play regardless. But again, based on what I'm seeing here, earnings, Alcoa should trade up on the back of earnings today. It kind of makes sense, too. First of all, if you get any sort of bounce in China, it's going to push the metal plays up. Also, and by the way, China is ridiculously oversold. There's so many bears out there that I do expect to bounce. In addition, you have to start looking at the nature of the chart and how overdone it is to the downside. Essentially, the more stock gets oversold, the more out of reality it becomes, to the point where the fear in a stock is ridiculous to relation to the actual logical levels that it should be at, if that makes sense. So again, that's what I'm seeing here as well in Alcoa. And again, you can see Alcoa from this high, from basically $14.50, it has sold off all the way down to $10.50. That's a huge move for a company this size. And if you look back here, it was at 17. Now it's trading just north of 10 as well. And even further back, it was close to 18. So, I mean, this stock is down tremendously. You can go to a larger time frame. I want to show you the larger time frames. Piercing the 200 here, you should see some sort of bounce around the 200. Very rare a weekly 200 gets taken out on such a drastic drop without some sort of snapback. Also, you have levels in here, pivot high right here, and there's a lot of support just below it as well. But right here, support 200 MA, and even if we go to a larger time frame, the monthly chart, we can go to that monthly chart here, and you can see you've even pierced the 50 moving average on the monthly. Okay, so a lot of support there. And by the way, look at this level right here and this little pivot high here. So you're really close to major support, plus you're piercing the 50. So again, listen, anything can happen on earnings. I've seen crazy things happen on earnings, but based on where things are trading, assuming China can get some sort of bid tonight, which I do think there's a good chance of, I would have to be in the camp that this sees a move back above $11, and a very good chance of a move back above 11 on Alcoa on earnings. Pepsi. Let's take a look at Pepsi reporting tomorrow morning. All right. Going to the daily chart here, Pepsi's a lot harder to read because you're not really at an extreme in the chart. You're off the lows down here, but off the highs. So what I call this is a neutral chart, and neutral charts don't give you much of an inkling. The fact that you're trading up over the last couple days, you're probably factoring in some decent earnings, which probably puts it in a more neutral to slightly bearish mode. I also think this is a longer-term bearish pattern. If you look at a larger time frame, it should look as such. Let's go to a weekly here. Yeah, see this? So you have the down move, and this is all inside bars. So I would rate this as a neutral to slight negative bias chart on PEP going into earnings tomorrow morning. Okay? So again, you got bullish on Alcoa into earnings, neutral to bearish on Pepsi. All right, now I'm just going to give you guys what we're seeing here on the charts in terms of, I want to look at the actual numbers here. Looks like Alcoa is expected to report 23 cents in earnings. However, I believe they announced that they would take a charge of 8 to 10 cents because they were closing a plant in Brazil, a smelting plant in Brazil. So again, look for something in that range of 12 to 15 cents on earnings. That's X items. If you want to take out the item or add the item back in, or essentially you'd be looking at 23 cents estimate. Revenue, $5.9 billion. Let's see if they can do better than that. Again, you're looking ideally, if you want to see this thing go up very nicely tomorrow, you want to see north of $6 billion in revenue and EPS north of, not taking into account the subtracted 8 to 10 cents for the closing of the plant, 25 cents in earnings. You get that, that will be a very significant quarter and a very, very bullish move for the stock. All right, a lot of people are pricing in that they're going to miss pretty precipitously. Let me just take a look at what the earnings whispers are telling us here. What the earnings whisper, let me just give me a second here to bring that up. Looks like we have, let's see here, earnings whispers for 21 cents. So it looks like the market is pricing in. That's why the stock has sold, because they're pricing in a miss. If so, really, I would say even if they come in at 23 cents, but especially at 25 cents, you will see a beautiful move. Revenue, 5.85. So again, revenue, they're looking for a little light as well to what consensus estimates were. So the whisper numbers, again, are what people are expecting, and that's really the result of where the stock price is trading currently. Pepsi, let's just quickly look at Pepsi here. PEP is the symbol on that. Earnings expectations are $1.23 on $15.8 billion. The whisper numbers $1.27. So notice how the stock's trading up because whisper numbers are higher. That's really often how you see it. So it's whatever the market analysts put out their numbers months ago, and then the market kind of figures out where they think it's going to be, and then that's where the stock trades. Now, again, if they can beat the whisper number or miss it, then that's where you get the bigger move out of the stock. All right, guys, bottom line is be ready. Earnings season's upon us. We're going to be giving out plenty of trades here at InTheMoneyStocks.com. Come join the Research Center. Come join the Options Alerts. Take care.